Good morning from our global headquarters in New York. I'm Manus Crenny with Denny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
More earnings hit the tape with already 80% of companies beating expectation. Up next, Amazon after the bell. C-suite surprise, Noel Quinn unexpectedly steps down almost after 5 years as HSBC CEO. And another CEO exit. Paramount boss Bob Bakish will step down amid negotiations for a possible sale.
A little bit of breaking news for you on the European data front. We've already had the GDP numbers. This time it's on the Euro area CPI. 2.4%. The estimate was for 2.4%, and the overall growth in the region at 0.3%. The estimate was for a rise of 0.1%. And as I was saying, Danny, Germany, France and Italy growing more than anticipated. Germany avoiding a recession. There's euro-dollar trading at 107.14. So I don't think there's sort of any massive sort of movement here. If anything, it is pretty much in line on the headline, 2.4%, as I say, and on the core, just ticking up ever so slightly on the core, 2.7%, and the estimate was for 2.6%. Again, it's going to be a high wire act going into June for the ECB.
Yeah, but this really does seem to just cement everything is okay. Inflation's not too pernicious. They can cut in June. After June, though, Manus, all bets are off.
Oh, you're back on that pernicious inflation. You do. You like that, don't you?
I do.
You do. OK, let's have a look at the rest of the markets as we kick off Tuesday morning. I'm a day behind and a day ahead. I just get in the right day. Here we go. S&P futures. We're nervous ahead of Jay Powell, of course, coming in. Tesla gives back ever so slightly, Danny, up 15% yesterday, the best day in 3 years. So far, 80% of the reporting season has beaten, with profits rising by just under 5%. Apple had their upgrade. So keep an eye. We're flat to down 0.1%. The bond market ticks up 1 pip. I mean, the quarterly refunding, what's the phrase in the story? Is no more than a rounding error. I mean, the quarterly borrowing, 243 billion. They'd estimated 202. And the bond market just pretty much ignored it. I mean, I think as Bank of America say, it's going to be tough to sound more hawkish than the market has already priced in. And you got dollar yen. Well, we're going to talk to Peter Kinsella about dollar yen and all the myriad of variations around that, whether they intervened, didn't intervene.
Well, today's an exciting day because...
I'm excited.
Just because, we're here and every day is an exciting day with Manus and me. But the BOJ is set to release its current accounts at some point. We don't know exactly when it'll come, but it should come in the next 24 hours. And that should give us an idea whether or not the BOJ intervened or not. If they did intervene... What is the success of that really going to be? We're only back at Friday's levels, Manus. You'd hope if they did intervene, you'd have more of a shock and awe. You'd have something more to hang your hat on to say, look, it worked and it's sustainable. And
I think there's a cracking analogy out there, given Ueda's tone and intonation, to suddenly then turn around and pivot to an intervention on Monday would be rather incongruous, if not undermine the very communication from Ueda.
Well, let's take this to Peter Kinsella. He's global head of FX strategy at Union Bancaire Privee. So, Peter, if we look at just where we stand at this moment, in 2022, the BOJ to intervene had to spend $62 billion, and it was successful because U.S. Treasury yields were coming down at that point. That's not the case this time. If they did intervene, is it just throwing good money after bad?
Thanks. Good morning to both of you. I kind of agree with this point. Look, the issue they have is kind of, first of all, they're intervening in the context of a steepening at the long end of the U.S. yield curve. And that is a worry in the sense that as long as that upward momentum is there from the U.S. and indeed from the broader U.S. yield outlook, that really means that their various interventions are going to be unsuccessful in the current context. What we saw last Friday from the BOJ was really giving us sort of, I would say, a dovish hold in the sense that whilst they kept rates on hold at 0%, they pretty much downgraded their inflation assessment for 2024 and then also for 2025. So when we look at what Ueda is doing, he's very slowly normalizing Japanese monetary policy, but he's doing so without any attendant yen appreciation. So in this context, really, as long as this paradigm continues of very softly, going on the monetary tightening side, alongside this rising sort of long end of the U.S. yield curve, you're going to see dollar yen, in this predicament, this pernicious predicament which we have, and that basically puts us where we are at the moment in dollar yen. They're going to be forced, basically into a risk management framework unless and until the long end of the U.S. yield curve stabilizes and eventually falls.
That risk management framework how much more then will they lean on rate hikes? I mean, the argument has been to unilaterally intervene is perhaps good money after bad, but what really could put a floor on dollar yen, a floor on the yen, I should say, is perhaps more aggressive hikes.
Yeah, I mean, look, I think the issue really for them is that because they've downgraded their inflation, their domestic inflation outlook for next year, it's really telling us that there's definitely a real limit to what they can do in terms of rate hikes. And if we look at what's priced in, markets have priced in barely 25 bips in terms of further BOJ rate hikes over the coming 2 years. Even if they get to sort of 50 basis points on the deposit rate, if we look at the U.S. 10-year yield, the U.S. 10 is doing 50 bips in 2 or 3 weeks at the moment. So I'm afraid, really, from a rate perspective, for the BOJ, there's not really an awful lot that they can do. Mm-hmm. I simply, for my mind, and indeed what I think is going to happen, is that they're simply going to have to manage market expectations with sort of frequent or infrequent interventions, just to slow the pace of the up move in dollar yen and to reduce sort of expectations of a one-way train in the exchange rate.
So if the pace slows, Peter, that doesn't necessarily say anything about the level. We already pierced through 160 at one moment. How much worse could it get for dollar yen?
Well, look, I mean, it depends really where the U.S. 10-year yield goes. If we get towards 5%, which is, I think, feasible by the end of the summer, that puts dollar yen back towards 160-ish. Will you see sort of an intervention at those levels? You possibly could. The BOJ at the moment, they will definitely be watching the US 10, but also watching the oil price, because certainly if the oil price rises substantially from current levels, that creates a problem for them, because then dollar yen, it's not just a question of the rate of change, but also a question of the level itself. And so really, I think from the BOJ, it's just a risk management framework for the next 3 to 6 months.
I like how you frame that. In other words, bond yields in the US are doing 30, 40, 50 pips, in the space of a couple of weeks. We go into the Fed meeting tomorrow night, and the consensus seems to be, look, the bar to be even more hawkish. It's going to be tough to sound more hawkish than the market has already priced in. Do you agree with that?
I would, yeah, indeed I would. I think if we look at the change in underlying inflation, core inflation on a month-on-month basis, that's kind of annualizing at around 3.3, 3.6%. So certainly there's nothing in the data which would suggest that the Fed can be in any way dovish. And so really what I would expect from the Fed on tomorrow evening is simply a hawkish hold in which we keep rates where they are. We continue to sort of stress this word of patience. And patience basic will mean, is it September, is it December? But it definitely won't be June. And that's really where I think we're going to get from the Fed.
And then we also get jobs later this week too, Peter. I mean, you'd have to imagine that there are emerging market central banks all over the globe who are hoping that we don't get a hawkish Powell, who are perhaps hoping that the data doesn't come in strong because they want to cut. But the trade-off right now is their currency. So are we about to get a bunch of central bank decisions, Peter, that are hamstrung from cutting because they have to keep in mind the depreciation of their own currency versus the dollar?
Oh, for sure. And I think that was the clear message that you got from the IMF meetings last week, which is basically that the majority of EM central banks, particularly in Central Eastern Europe, but to a lesser extent also in Latin America, they're really much closer to the end of their rate cutting cycles than was the case 2 or 3 months ago. And so I think really what you'll find is that you may see 1 or 2 rate cuts from various EMCBs, like Mexico, maybe Brazil, but really they're going to change their language, they're going to change their stance because they realize they need a positive real rate spread over US Treasuries, and as a result, there's a limit to what they can do. So no question in my mind whatsoever, what the Fed is saying and doing is having an effect in foreign shores.
And of course, nowhere is that more prescient than at home in Europe, where the data comes in, the growth data comes in certainly better than the market had anticipated in the core of Europe, in Germany and Spain. And that inflation data wasn't exactly rabid. Yes, it was a little bit hotter, but is the stage still set? Do you think the ECB can cut ahead of and in size and of a quantum that will make a difference in the FX market between dollar and euro?
So it really depends. I think if we look at what's happening in the Eurozone, we've seen better growth data. That's what the PMI data have been telling us pretty much since January. And so today's GDP beats didn't really surprise me that much. For the ECB, really, I think it's all about what they say in terms of their 2025 inflation forecast. My hunch is basically that we're going to get a rise in that forecast, and what you'll see then is the market moving to price out rate cuts from the ECB. So whilst we're definitely one and done in June, that's a done deal. I think it's the future scope of rate cuts which will be questioned depending upon what the ECB say and do. And really at this stage, I think that to me suggests we're likely to see a floor in euro-dollar, probably at levels of 106 coming into May and June.
Okay, holding the floors in various geographies. Peter, thank you very much. Peter Kinsella of Union Bancaire Privee, our guest this morning on the FX markets. Staying with the trending stories on your Bloomberg terminal this morning, this is what we've got for you. China's factory activity expanded for a second month. It's the best streak in more than a year. And the official PMI reached 50.4 in April, slightly better than forecast. The positive reading was echoed by a private measure that showed factory activity growing for 6 straight months.
2 traders in Hong Kong have left SocGen after the French bank discovered that risky bets went undetected by its risk management systems. SocGen didn't lose any money from the transactions, but the trades could have cost the bank hundreds of millions of dollars in the event of an intense market downturn. The lapse does raise questions about risk management at one of Europe's biggest banks.
Apollo is facing a lawsuit relating to life insurance policies. According to the lawsuit, the PE giant bet on the longevity of senior citizens by acquiring illegal policies and funneling the payouts through shell entities. It allegedly set up a web of sham trusts using a secretive affiliate to hold portfolio of stranger-originated life insurance policies worth roughly $20 billion. Coming up in the show, big tech earnings. You got it. Amazon's going to hit the tape today. We'll focus in on the cloud and AI. Danny.
But first up next, Quinn quits. We're going to break down the HSBC CEO surprised exit here on Bloomberg.
It's Bloomberg Brief. It's definitely Tuesday, and I'm Manish Kani alongside Danny Berger. I got it right. Breaking news in the past 24 hours. HSBC CEO Noel Quinn unexpectedly stepping down after nearly 5 years in the job, triggering a search for his replacement at Europe's largest bank. The surprise move came as the bank reported a pre-tax profit that slightly beat expectations. They announced a share buyback of $3 billion. For more on the story, let's get our finance reporter, Harry Wilson, who tracks HSBC's every move. Harry, good to have you with us. What is going on here? I mean, I thought that Quinn was going to go on for a very long time. He was a CEO that was anchored in. Do we know what happened?
Well, listen, Manish, you and me both. This certainly came as a shock to us this morning. I think what the line certainly coming out of the bank is that this was a time for transition. The CEO has been very clear that he fancies a break. You know, these are very punishing jobs with long hours, particularly HSBC with all the globe-trotting required by it. But still, nonetheless, this is very much a surprise. What's actually gone on here? I mean, strategically, the banks seem to be well set. It looks on a pretty stable footing. Results were coming back. They'd returned $28 billion of capital in the last 18 months. You know, it all looked pretty good. So this really has come out of a clear blue sky. And we're still sort of now trying to find out exactly what's gone on here.
So who's likely to replace him? I know the bank is looking at both external and internal candidates, Harry, but is there anyone that stands out?
I mean, the first thing you can say is that if they probably had a very obvious internal candidate, I think we'd probably know who the CEO is by now. That said, there are some very strong candidates inside the bank, particularly the Chief Financial Officer, Giorgio Hedri, particularly sticks out. But outside of the bank, I think an external candidate is definitely a possibility. We know that last time when they were looking for a CEO, they had a very strong candidate from outside the bank in the then UniCredit CEO, Jean-Pierre Mustier. I think this time, I think it's quite likely they could go outside the bank. Who that be? There are several candidates out there. I mean, I think one that might stand out particularly is the current Lloyds CEO, Charlie Nunn, who formerly worked at HSBC and is very well regarded. But listen, these are very early days. There are lots of candidates out there. And one thing for sure is in the next few days, we're going to hear a raft of names linked with this job.
All right, Harry, we're going to have you back to go through them. Harry Wilson there, thank you so much. All right, let's turn to autos. It was a tough start to the year for both VW and Mercedes, both of them falling in the European trade, 3.7% and 2%, from everything from costly new models to waning EV demand. Let's unpack the numbers with Bloomberg's Oliver Crook, who joins us in Berlin. Oliver, clearly it was a bad quarter. Just how bad was it?
Yeah, Danny, when you look at Volkswagen, Mercedes, you also had Stellantis out today. I mean, just look at the profit for these companies. Mercedes was down 34% from the first quarter, Volkswagen down 20%, for Stellantis, sales down 12%. These are not great numbers. Admittedly, tough comps with about a year ago in the first quarter, but you also see the margins coming in below expectations, which is all important to investors. As we know, it is partially because they're trying to bring out new models. They're trying to catch up a little bit on the EV race, but also EVs in the first quarter. The only company in Germany that really did well in EVs in the first quarter was BMW. Mercedes and Volkswagen both lost ground. They have not changed their outlooks at this point, so they're sticking to it. The question is whether Q1 is the trough, as these guys want to convince investors. And this morning, investors are not buying that narrative.
Ollie, good to see you. I've become a bit convinced on, obsessed with the whole EV thing. You know, getting a Mercedes EV, a BMW EV, and a Tesla, and you begin to understand product differentiation. But differentiate the strategies for us. And, you know, is it all about transition? Can they really blame the whole disappointment on new model transition? I know you're in the market for that G-Wagon, the baby G-Wagon. He's on the list, you know.
You know I am, Manus. Well, listen, I know you like pairs of words to sum things up, so let me try to do this with all of the companies. Stellantis, it's private equity. This is a business that has been trying to run lean, a little bit a la private equity, cutting jobs, juicing up the margin on the sales, and also paying the executive a lot of money, right? So that's what they've been doing.
We like that.
And that has been the technique that's what investors have been rewarding the most over the last 12 months if you look at the stock performance. For Volkswagen, it's catch up. They are behind on EVs, they're behind in China, and they're really trying to get that technology into the car that the Chinese consumer has come to expect, and they are really faltering at this point. They're spending literally hundreds of billions of dollars to try to get there, but they're not there yet in the short term. And for Mercedes, it's, Manus, your favorite, high end, the luxury trade. The thing that's interesting in the first quarter this year, Manus, is that luxury trade is starting to falter. We saw it in Porsche on Friday. The margins are coming down. We're seeing it now with Mercedes, that maybe that high spender, which has sort of stayed persistently strong post-pandemic, is starting to come down.
I can confirm Manus has yet to buy his luxury car for New York, yet to buy the G-Wagon.
Have you seen the margins on Ferrari? I mean, just so far away from everybody else. Anyway, that's another story for another
he won't
day.
even get me a Birkin, so he's not going to get a Ferrari. But otherwise, Oliver, I have to say, I do own a pair of Adidas Sambas, and I am embarrassed about it because when I go out, literally everybody else are wearing these things. But Adidas earnings, these did seem to be a bright spot in Germany Inc.
Yeah, that's right, Danny. Your anecdotal research here has proven to be the fact. In fact, the story here in the first quarter for Adidas, Samba is doing extremely well. So too some of their other brands, the Gazelle. And, they saw profitability, faster than they'd anticipated. They're holding onto their pricing power, being able to price more highly. They've dropped some of that inventory. That's a key thing we were watching last quarter. They've dropped it by 20%. And let's not forget, they actually came out of this whole Yeezy controversy and, borderline disaster relatively well. They were able to move some of that inventory. When you look at the regions, Europe was the strongest, up 14%. Starting to see some recovery in China, up 8%. What was interesting is North America, where you're supposed to have the strongest economy out there right now, sales were down 4%, though they expect it to come back in the back half of the year. As to why the stock is lower today, guys, I'm going to go through the last refuge of those who don't know, which is maybe a bit of profit taking after that epic run you can see there on the screen.
That you are clutching at straws at the end of what was a mighty run and mighty delivery. But we'll take it and we'll let you go on that. We don't know where you're off to, PE. Right, Oliver. Thank you very much, Oliver Cook, tracking the German corporate story on a global basis right here on Bloomberg. Time now for the front pages. What is making headlines around the world? And first up is the New York Times. This is a call that happened on Saturday between the president of Mexico and the United States, Mr. AMLO. Both vowed to step up action on illegal immigration, stronger enforcement measures. Danny, this is going to be around buses, railways, etc., preventing those as sort of conduits for illegal immigration. So quite an impactful readout of the call on Saturday.
Right, no secret to why that would be happening now, heading into a presidential election. No. Now, next up, man, is the one that caught my eye. It's Boeing. So they raised a $10 billion bond sale from Monday that attracted $77 billion of orders, helping some of their finances. But this just shows how hungry people are in the corporate bond market if they're going to buy Boeing.
Think about it the other way around. The banks out there with their exposures to Boeing, who's going to let that company come under woe? Now, how do you use the PJ? The question is, how are you charged for using the PJ? Private jet. That's the Wall Street Journal article. You like this?
Yeah, I did. And the Journal did their own analysis and said that companies were underreporting how much executives spent on the PJ. You know, look through the numbers yourself and I think decide.
Yeah, Bob Iger, $800,000. Yet if he booked it himself, his trips would have cost him $2 million. I'm not in that market.
Same. From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
More earnings hit the tape with already 80% of the companies beating expectations. Next up, it's Amazon. And that is after the bell. C-suite surprise, Noel Quinn unexpectedly steps down after almost 5 years as the HSBC CEO. And another CEO exit, Paramount boss Bob Bakish, is to step down amid negotiations for a possible sale. All change in the C-suite. Danny, good morning.
Good morning, Manus. So many corporate stories to sort through, be it earnings, be it executive changes. But what happens when we get Jay Powell tomorrow? Does that overtake this equity market narrative? The narrative had been earnings. Earnings coming to save the day. Last week and yesterday's advance takes a pause, down about 0.1%. U.S. 10-year yields, little changed, up by 1 basis point this morning. We got the European data out this morning. Nothing to indicate that the ECB won't go in June, but after that, all bets are off. But overall, that does seem to be slightly weighing on the bond market as well, with a higher TGA yesterday, $52 billion, not enough to shake the bond market. Finally, dollar versus yen, dollar up about 0.3% versus the yen. So that continues to decline for the yen. We're only at 156, Manus. This is the level where we were at before Friday. So the BOJ intervention didn't do too much, but as Peter Kinsella was telling us, if we do get a more hawkish Fed tomorrow, that only creates more of a headache for central banks around the world who really want to cut, who are almost nearing their cutting cycle, and perhaps will have to stop sooner because of interest rates, because of currencies.
Yeah, it takes me back to a phrase from a very old Irish playwright. You know, you're tethered to the Fed, you're anchored to their decisions, and in the end of the day, it's interesting if you look at Ueda's comments on that dovish position from the Bank of Japan on Friday, Danny, relative to where we are now, which is we're speculating about the size and the scale of potential intervention. Nobody's saying there was intervention, but a lot of storylines have been written around that. The issue is he sounded so dovish on Friday in terms of the inflation narrative and the outlook for 25 and 26.
Yeah.
Would it make sense? And would you just simply undermine your own rhetoric if you then went for intervention right now ahead of the Fed?
And how expensive would it be? The Bank of Indonesia is perhaps a great example. They intervened in the rupiah. They were very clear that they did so. And still the currency is more than 2.5% weaker versus the dollar so far this month. So maybe it doesn't work as well.
Well, good money after bad. That's the theory. Let's see what the Fed delivers tomorrow night. And, you know, it's already very well priced for a hawkish, not tilt, but sort of like dance.
Yeah, that's definitely what is expected. Well, this morning, Manus, we're also seeing Tesla slightly weaker. More headwinds for the company. The information is reporting that Musk is planning hundreds of more job cuts as 2 more senior executives leave the EV maker. Let's get now to Bloomberg's Alex Webb. Alex, you get the good news of yesterday that Musk goes to China and gets closer to getting his driver assistance there approved. And then we hear that 2 more executives are leaving. Oh, and everyone underneath them is also going to be losing their job. What's happening?
Well, I think the thing we saw perhaps a year and a half ago is that Tesla massively expanded its capacity to, I think, something like 2 million units a year, and then promptly the bottom fell out of the EV market, right? A lot of the cars that had been sold a number of years ago came into the secondary market, second-hand market. The price on those, the drop-off was considerable. Just generally, the appetite for these cars new has fallen as well. So there's a huge recalibration across the electric vehicle industry. We had heard some reporting already from Bloomberg, amongst others, that there were likely to be more job cuts coming down the line. The thing that's quite interesting when you look at Tesla is if you look at revenue per employee, that has remained, it's increased. But when you look at operating profit per employee, the drop-off is quite considerable. You can see it on this chart here. It's dropped by, about half. The drop-off in operating profit itself is not that steep. So it looks like this is an effort to bring that sort of number up.
And of course, we're counting down to the Amazon report today. This is going to be incredibly important when it comes to the web services side of the business, because we're going to benchmark it back to Microsoft.
Yeah, and of course Google. Both companies have enjoyed a big sort of boost to their cloud business, not least from the rise of their AI business. Don't forget that artificial intelligence is at this stage a cloud business. It's a way of kind of bringing corporate customers in particular onto your cloud. Microsoft, through its relationship with OpenAI, and Google, of course, through Google DeepMind, they have a lot of the bleeding edge stuff when it comes to AI. Amazon doesn't in quite the same way, although it has a relationship with Anthropic. That's a company that was founded by a bunch of departees from OpenAI. It'll be really interesting to see whether Microsoft and Google have been able to gain share from AWS, and whether AWS is, despite this lack of big relationships that its competition has, is able to grow its AI business at a similar pace.
Alex, we'll count down to those numbers. I'm sure we'll see you before the week is out. Alex Webb, ahead of the Amazon numbers. Our guest this morning is Dec Mullarkey, Managing Director of Investment Strategy and Asset Allocation over at SLC Management. Good to have you with us, Dec. Welcome to the show. It's interesting when you look at Tesla, the theatre. Look over here, look over here, look over here. I'm in China. It's all okay. And yet the reality is something very, very different about the calibration of demand for EVs.
Absolutely, and that's the big story right now, is that they overproduced, just as your previous guest said, and now we're in a situation where Tesla will be under pressure to cut costs and really reset to where demand is. And to your point, they have been distracting the market in some way, and I think Musk has been held to account for that because the stock was down 45%. But their earnings did give some comfort that they were resetting and focusing on cost and coming up with an affordable model. And then over the weekend, the breakthrough in China, that has helped. But there's still a lot of execution to happen here. They've gotten back maybe half of the loss they had this year. But that's the question going forward here, is how do you calibrate to EVs, and how do you make them more affordable and make them more of a mass market? And that's still in transition. And Tesla can lead on that. But I think the market is also sending a message to Musk that he has been, seems to be, all over the board on some of his portfolios, and he's got to reset on some of that.
To that point, Dan Ives, whenever he joins us and he talks about Tesla, often the conversation is there an adult in the room? You see this kind of chaos and you say Tesla can take the lead, but internally, can you take the lead when you have executive after executive departing? You're letting go people underneath those executives. There doesn't seem to be a clear strategy. The legacy of Tesla has been there, but is that enough to carry it forward when you look at what's under the surface? Yeah,
it's a great question, because at this point or other, you doubt the strength of the pipeline of talent there. And I think the only way that Tesla will wake up and maybe that Musk will reset, if the market really does send a more serious message maybe than they have already. And that's where we're at. I think the market probably would at some point be the adult in the room, because I think his board will push back at some point. But we are dealing with a wonderkind, and has delivered an immense amount of value across the board. So I think it's an interesting dance and challenging, but I think we're getting to that point.
Well, certainly genius level of reward, whether you look at founder genius in Zuckerberg or in Elon Musk, and certainly it's bounced considerably since its low points, since the nadir of last week. Let's move the agenda along. We're going to get Amazon later on today. And what's critically important there is the size and the scale of adoption of AI within their cloud business. So just define what a success looks like in tonight's numbers from Amazon.
Well, that is the core issue as to what's happening there. I mean, the markets will be looking at, okay, what's happening in advertising, what's happening in cloud in general. But their traction on AI, they will actually have to spell that out. They have not done that in advance. And right now, Microsoft is really, really streeping ahead, and they've really established, their presence in the market. So they're going to actually have to be much more specific about their AI strategy, what's going on in that, and actually give attribution around the revenue that's coming from it. So it's definitely going to be a show me the money on AI type of call, and I think they're going to get a lot of pressure. And if they really don't deliver on and having some clarity around that and what they're doing, I think the market is actually going to react poorly.
It's interesting, the willingness of this market to punish companies, because we thought in the past, if you just talk about all the fancy stuff you're doing in AI, the market would reward it. In fact, the market as a whole, despite good earnings from Alphabet and from Microsoft, the dip buyers haven't shown up. Bank of America data shows that, Deutsche Bank data shows that, Citi data shows that. The dip buyers are not out like they usually are. Has something significantly shifted in the sentiment of this market?
It absolutely has. I mean, coming into the year, what drove last year was just themes, the big themes, AI, what's going on, maybe an obsession around the Fed. This year, it is all about earnings. It's all about looking at not only on what you delivered or what you expect to do, the quality of your balance sheet. That's taking front and center. And your point you made, the comparison between how well Google and Microsoft were received versus Meta, who had decent earnings, but they were all over the board, very amorphous, very unclear about where they were going on just spending a lot of cash. The market's not in the mood for that. They really want to see, in this kind of income-driven environment where yields on bonds are so high, they're basically saying, stock market, you've got to deliver us pretty dependable earnings, even if you've got, this deferred revenue is not in vogue right now.
Right.
Do you think we're moving to a phase of where growth is seriously challenged by the high? Look, higher for longer is now becoming the accepted norm, the narrative of the market. How high for how long is the moot debate? But to that extent, that's what challenges growth even more aggressively now than perhaps even just a month ago.
Right. So there's an interesting breakout on the growth story. If you look at large cap, they pretty much have termed out their debt, and that's been the story. So they're less vulnerable to rising rates. Eventually, we'll catch up with them. Yeah. But who's really vulnerable are small cap. If you look at, say, the Russell 2000 as a proxy for that, about 40% of the companies have floating rate debt. So they're the ones that are actually going to get a crunch. Surprisingly, it hasn't been happening. You see leveraged loans holding up very well, all those corners of the market. But there will be a payday on that.
Have we had one guest that's been bullish on small caps?
Stop. She searches around. She gets everybody on the show, and then she goes after a small caps question.
I love an underdog story, Dec, and certainly that's
when those rate
cap.
Cuts come.
It will be my moment to shine. It will be my moment to shine. Hey, Dec, we really appreciate you coming in this morning. That's Dec Mullarkey of SLC Management. Okay, coming up, Paramount extends gains with a management shakeup and potential M&A. A lot to cover. All of that next here on Bloomberg Brief. It's Bloomberg Brief, Danny Berger and Manish Kranny in New York. So Paramount is replacing CEO Bob Bakish with 3 executives amid a potential takeover deal of Skydance Media. Oh yeah, not to mention they also had earnings. A lot to go through. Let's get to Geeta Raghunathan, Bloomberg Intelligence media analyst. So Geeta, Bob Bakish is out. So is this deal happening now?
Yeah, it definitely seems like that, Danny. I mean, just the leadership shakeup now with this trio of executives who are kind of taking over definitely seems to be a transitory arrangement. It seems like the Skydance deal is about to happen. Remember, there is a May 3rd deadline for an exclusive negotiating period. That was a 30-day exclusive negotiating period that Skydance had with Paramount. So it's up until this Friday. They're obviously looking to get something done.
So he's gone. Is it going to be a materially better deal then that's on the way? He was the objectionist in the room.
So Skydance is doing everything that they can to kind of appease investors. Manis, I mean, ever since this has been an ongoing saga now for about 6 months or so, Skydance has kind of been in the wings they've tried all kinds of different things to gain control. It's a pretty complicated way that they're going about this. But what really happens here is you have the controlling shareholder, who owns about 80% of the voting stock, which is Sherry Redstone, she obviously is getting a really good deal, because if you think about her economic interest in the company, it's about less than 10%, worth about 800-900 million. She's going to get paid out about $2 billion. So obviously, she's getting a good deal. But I can't say the same for the rest of the non-voting shareholders. They are actually going to be diluted by this deal, which is why there has been a lot of resistance. And Skydance is now, sweetening the bid a little bit. They're offering a $3 billion cash infusion into the company. But I think whichever way this goes, I mean, the change of control is really imminent at this point of time.
But Geeta, presumably the board needs to represent those non-voting rights shareholders, the Class B shareholders, and would look at this and say it's not a fair deal. I mean, could the board even presumably block something like this? Or as long as you have those Sherry Redstone shares, those Class A shares, Skydance can do whatever they want?
Yeah, and this has kind of been the whole bone of contention here, Danny. So, we had 4 board members resign, leave the board. So that it's been complete and utter chaos at management, to put it mildly. Sherry Redstone ultimately has the biggest say. She calls the shots. There's no doubt about it. And I think it's pretty much going to go her way at this point.
So the actual numbers, remember those? The things that actually generate the value, that creates the value for a takeover bid to be of interest. Super Bowl TV ads, they got a bump there from the Super Bowl. But it looks like the streaming business is shifting as well. So just talk us through the actual numbers.
Yeah, this was really such a bizarre earnings call, right, Manus? I mean, it was 8.5 minutes, probably the shortest call ever in the history of media earnings. But yeah, the numbers were actually pretty decent, I would say. Advertising, which has really been a challenge across the entire TV industry for CBS, was not a problem because they had the Super Bowl. And that same Super Bowl telecast actually played into pretty good numbers for Paramount Plus as well, because we were expecting about 2.5 million new subscriber additions at Paramount Plus. They came in almost close to 4 million. So again, a nice bump there. And across the board, I mean, if you saw even some of the streaming segment numbers, whether it was, the increase in ARPU or even slightly lower losses, I mean, those are all encouraging signs. The question is it enough? I'm not necessarily convinced that it is going to be enough, especially as you kind of go through this change of control. You have this really complex management structure. I mean, what you need is kind of stable management to execute, when a company is kind of facing these challenging or these challenges. I'm not so sure Paramount is going to be able to do that successfully.
Okay, Geeta, thank you very much. Geeta Raghunathan there of Bloomberg Intelligence. I just turned around to Danny on the IB there, and I was just saying, actually, the truth is, for the Super Bowl, it came down to, of course, Taylor Swift was there. You remember we tracked her plane all the way from Japan?
Which she did not like.
Invasion of privacy, but it was all to get there to see, of course, her boyfriend.
You know what? It's a great media strategy. If you're Paramount, just say, hey, we're just going to show everything and everything that Taylor does. And there you go. Then you turn around the company. They should put me in as CEO. I can figure this out.
There you go. But would you represent the Class B shareholders? That's all I want to know. Be careful. I'm
not getting into that tangled web.
She's just all about the voting rights. We're going to talk about oil, big oil, and Chevron, expecting crude demand to grow. It will remain strong in the US and in Asia. The CEO is Mike Wirth, and he says that the company's projects that growth will remain relatively flat this year and see momentum in 2025. He caught up with Bloomberg yesterday.
We just continue to see productivity and efficiency gains, and we're getting more production out of the same inputs: wells, completion, rigs, completion crews, et cetera. So we expect to be, relatively flattish through the first half of this year. Growth in the second half to exit over 900,000 barrels a day, on our way to 1 million barrels a day in 2025.
So that's really back half weighted. Why is it back half weighted? What's going to sort of change?
Well, we're bringing another completion crew on in the middle of the year. So right now we're building up an inventory of drilled wells that are not yet completed, and then when that rig comes in, we'll start to put those wells on production. So it has to do with optimal capital efficiency as we bring equipment in, and nothing unusual. It's really part of the normal program there. It's not a straight line every quarter.
I am curious, Mike, about the other big deal that everybody wants to know about, and that's the deal with Hess, the expansion into Guyana and those oil fields there. Where do we stand right now with regards to what you're doing internally to close that deal, and where do we stand in the arbitration with Exxon?
Yeah, Romaine, so maybe 4 points. Number one, integration planning has been ongoing since we announced the transaction, and that's gone very, very well. Number two, the proxy will be mailed to Hess shareholders before the end of April, and the shareholder vote will occur before the end of May. Number three, we got a second request from the Federal Trade Commission, and we expect to certify substantial compliance with that in just the next few weeks and be through the antitrust review process. And then that leaves the fourth work stream here, which is to work through this arbitration process relative to the terms of the joint operating agreement. That is likely to take a little bit longer, and we'll have to see how the exact scheduling plays out on that. We don't have those dates pinned down just yet.
Do you think, though, that you can get this deal done this year in 2024?
Well, that's certainly our expectation. We're working closely with Hess in order to do that. The arbitration process has been initiated, and ExxonMobil indicated in an investor conference last month that they think 5 to 6 months is what this could take. We certainly believe that's a sufficient time frame.
That was the Chevron CEO, Mike Wirth, speaking with Bloomberg's Alex Steele and Romaine Bostick. Okay, coming up, we're going to get you set up for the day. Got Amazon on deck. Context matters on Bloomberg. It's your Bloomberg Brief. I'm Danny Berger alongside Manus Crandy in New York. Okay, let's get you set up for your trading day. We're going to get McDonald's, Coca-Cola, PayPal earnings all before the bell. And the Fed will begin its two-day meeting. And we get the Conference Board consumer confidence numbers. Those hit the tape at 10 a.m. Eastern. Then we're going to get Amazon, AMD, Starbucks, all reporting after the bell. Can the AI spend hold up with what investors want to see? And that is AWS still having its market share.
Well, we got some micro movers for you, or big movers for you. Stellantis. First quarter sales, Danny, there, the stock is down 2.61%. First quarter sales down 12%. Model changes, but they do say a return to growth. That's what they're promising. NXP Semiconductors rising after their forecast for profit and revenue, topping out on the estimates. And then, of course, it is down to Amazon. As you said, we just had that conversation. It's going to all be about their cloud business. That is the definition and the parameters of success. Danny.
Manus, let's get a quick check on the yen this morning. It is weaker. As we still look into this market and say, has there been intervention? The BOJ should give out their current accounts at some point today, which might give us a hint as to whether or not they intervened. Yeah, Peter Kinsella with us from Union Bancaire saying, look, we're in this tight range of management for the Bank of Japan and Ministry of Finance. If they did intervene, it would perhaps undermine Ueda's dovish narrative last Friday. More on that through surveillance, I'm sure.